So interesting day today. We saw really an unraveling in quite a few things. We saw the S&P come down a little bit, the Nasdaq. As always, it is your trade, your responsibility. If you're okay with that, let's keep going. Of course, struggling with the software trade. The Russell 2000 also not doing that great. I wonder if that's a little bit of the broader kind of vibe that the markets are getting right now, which is that there's an amazing amount of disruption out there. What does that mean for jobs? What does that mean for potential recession, et cetera, et cetera? So I'm not saying that's really taking that's really steering the bus right now. I'm not saying that really drives the bus right now, but I think it is something to take note of, and I have been talking about that a little bit lately. At the same time, we can see here, let me make this a little bit bigger for you. We can see here amazing put skew. So with markets at all-time highs, we're seeing this absolute amazing put skew exploding to the upside, call skew dropping. What does that mean? Well, if you sort of compare the two together, it's what we just call skew, right? When we say skew is high, it means the puts tend to be more expensive than the calls. Now you can separate them out. You're going to compare those to the at the money implied volatility. So basically, the translation of this is people have been really, really hedging quite hard, and they're starting to forget about the upside. Now, I've been a little bit negative on markets, and certainly on the software area, and I've been right. But this is something to take note of here. We can see that people have gotten kind of extremely sort of hedged out. Doesn't mean bearishness necessarily, but it just means they're really getting kind of hedged out here in short-term options, kind of wondering if we're going to break a little bit lower below some important technical levels, which we have not done. We've tried a couple times. We have not done it. And on this flip side of the coin is upside calls are getting kind of inexpensive, right? So an interesting play here, even if I'm bearish, might be that there's an opportunity to kind of play what I call a turbo trade, where you're sort of harvesting some of that expensive option pricing to pick up some of the cheap one. I'll have to keep an eye on things in the next few days. I think for now, I'm still just a little bit cautious on what's going on out there. So this is the little interesting tidbit of the day. I want to start doing these videos, little kind of interesting tidbits. So you can see here, I think this is something interesting. So for the last few years, you can see mega cap tech, as we know, the Mag 7, basically really crashing high, right? It was everything. We talked about this concentration. Everything's in these stocks, and they're sort of really driving the bus. And buying every dip worked. Remember what that was like. Every single dip worked. Even bigger dips, but every small dip worked. Every breakout worked. Retail was sort of trained like a Pavlovian dog to just constantly we all were, not just retail, pros, everybody, buy the dip, buy the dip. What was this? What was the acronym? Buy the dip, stupid. Buy the BT, just buy the dip, right? You could load up and you always got rewarded. That has really changed. So look at this. This is the volume going into Mag 7 calls, going into Mag calls. These are kind of very excited moments. Remember the COVID days, everyone was all over tech. Then it really, really calmed down. Then suddenly ChatGPT happened, and then we sort of drove things up. And then Mag kind of ran out of steam in 2025, but the call interest had already happened. And so look at where we are now. We're kind of in this sort of, kind of consolidation stage, you could almost say, in terms of the interest in calls. A little bit of a pop up here as people sort of start to pick away at the big sell-offs, pick away buying calls. But the call volumes have really fallen back to levels that we really haven't seen since 2017, right? And so that's our sign of real exhaustion. That might actually be just slightly positive from a trading standpoint. But the retail community is starting to give up a little bit, right? They're not pressing that upside the way they used to be, and it's not working. So there's a very good reason for that. And what that means is people have gotten a dose of, for the first time in years, what I call the full Greek salad gone bad, right? You're buying calls, you're long delta, and the stock's just drifting lower and lower and lower. So you're getting hurt on delta, which is just your long, right? You're long. It's an expression of being long one of those mags, and you're wrong. So it goes down, you get hurt on delta, you're bleeding theta as well, because you're waiting and waiting for this thing to turn around. It's not happening. And then just to make things worse, in many cases, you're actually even dealing with vega, which is that exposure to long implied volatility. Now, oftentimes when stocks plunge, you get a benefit from vega because fear levels rise and the option pricing rises on a relative basis. That's not necessarily happening because what happens, we saw this with Meta not long ago, when the market decides a stock is kind of dead money, then the implied volatility can collapse as well, right? Just to make things more complicated for you. So you're losing on direction, you're losing on time, you're losing on volatility. That's exhaustion. It's not a crash. It's about just running out of fuel, and they're just not trying that game anymore. So on the one hand, that's kind of a positive. On the other hand, I think there is reason to believe that this could continue throughout the year, because I believe there are more interesting themes, which I've been talking about, the drop, things you can drop on your toe, the infrastructure play, those inputs, the commodities, the fixing up, the upgrading, all that stuff really looks much more interesting to me. Now, there are going to be trades, right? It's a stock market. There are going to be trades all the time. I'm personally, as happened on Microsoft recently, I really flipped negative and it rallied up to 423 and I got negative. I started shorting it again and also selling some call spreads, some bearish income trades. So if you're looking at the tech space in general, you got to really kind of look very, very carefully. Those places that I've been highlighting, like Lumentum and Coherent, those parts of the market, memory chips, still going to be in short supply. So the areas of the market that can do well, there are areas that are going to be in very, very great deal of difficulty over time, I believe, as well. So those are the areas that you can maybe fade and then look to buy areas that have that nice relative strength. Some of the industrials, some of the even like a Staples. It doesn't get me excited, but some staple names are good. The machinery in the industrial sector and materials, of course, we've seen a nice little bounce. We got into some silvers recently in Leaps Trader and a couple of services. So I hope that gave you a little indication of what's going on out there, at least one side of it. I'll try to bring something interesting to you every couple of days, and we'll see you next time.